Understanding the difference between trading and investing can shape your future. The choices you make today matter, and the right knowledge truly has the power to change your life. Both are about buying and selling, but the big difference is time and strategies. So, let's understand trading first. Trading means buying a stock at a low price and selling it when the price goes up. This depends on your strategy and goals, and it can last minutes, hours, days, or weeks. Traders don't care much about how good the company is. They only focus on price movement. To trade, traders look at price charts. This method is called technical analysis. Open any random stock chart and look closely. The green and red candles say it all. Green candle means buying, and prices going up. Red candle means selling, and prices going down. By studying these charts, traders can predict when and where the stock price will fall or rise again. This is what we call technical analysis. But technical analysis and candlestick charts are more complex. So in this video, I'll keep it simple. Even with technical analysis, trades can fail and prices can drop suddenly. That's why traders use a stop loss to stay safe. A stop loss sells the stock automatically when the price goes too low. It protects you from large losses, but sometimes you may sell too early and miss bigger profits. Trading comes in different styles. Day trading means buying and selling a stock on the same day. Swing trading means holding a trade for a few days or a few weeks. Position trading means holding a trade for months to benefit from long-term price trends. Trading can be exciting, but it is also stressful and risky. You need to watch the market closely and make quick decisions. You can trade stocks, currencies, commodities like gold and oil, and cryptocurrencies like Bitcoin and Ethereum. Investing. Unlike trading, investing is about patience and long-term growth. Investors care more about the company than short-term price moves. They buy good companies and hold them for many years. Investors rely on fundamental analysis, which means studying a company's financial health. This includes things like profit, revenue, debt, and future growth. To understand this, investors carefully study the company's balance sheet, income statement, and cash flow statement. They also check important metrics such as revenue growth, profit margin, ROE, and EPS. By analyzing these numbers, investors can decide whether a company is strong enough to grow over the long term. Some companies also reward investors with dividends, which are regular cash payments given to shareholders from the company's profits. However, dividends are not the only way investors make money. Some of the biggest returns come from long-term investments in new or emerging assets. Consider this remarkable example. In 2010, if you invested just $600 in Amazon shares and held them, that investment would be worth about $23,900 today. No trading, no stress, no checking charts every day, just patience and time. This is the lesson of investing, showing how patience and strategic thinking can lead to extraordinary results. Long-term investing grows slowly, but it is more stable and easier to manage. Also, investing is not only about stocks. You can invest in bonds, mutual funds, ETFs, real estate, and even cryptocurrencies, as long as you understand the risks involved. So, which one is better, trading or investing? It really depends on your goals, your risk level, and how much time you can give. If you want fast profits and can handle stress and quick decisions, trading may be right for you. But if you prefer steady growth without watching the market all day, investing is a better choice. Here's my final advice for beginners. Before you start trading or investing, take time to learn. Without knowledge, you're not investing, you're gambling. Start small, practice regularly, and improve your skills step by step. If you want to learn more, you can watch my video above. It will help you understand stocks in a much simpler way. And if you found this video helpful, please like the video, subscribe to the channel, and turn on notifications so you don't miss future videos. Thanks for watching, and I'll see you in the next one.